Well, I think, it's all markets, gold, silver, the stock market. I don't think the stock market continually can see higher highs, almost on a daily basis without, governments involved. Central banks are buying stocks in the open market and, trying to prevent these markets from crashing. So, yeah, for sure. It's all these markets, whether you call it manipulated or not. Maybe manipulation is the wrong word, but, there's a lot of activity out there that is, protecting people's books or protecting people's investments. So if you've got a long position or a short position in a particular, stock or entity of some kind, it's in your best interest to try to, force a profit out of that position. So you'll defend your position, tooth and nail. If you've got enough money, then maybe you cross the line and you can start calling it manipulation. But whatever you want to call it, definitely these markets are managed.
Do you think that as they throw these gold contracts at gold, because just the other day they threw out 20,000 contracts and they brought gold down. Do you think they're trying to keep people away from gold? Do you think they're trying to keep people away from silver?
Yeah, I think so. It's more so gold probably, but, silver is looked at as the poor man's gold, which is, quite honestly, complete fallacy. Silver's not gold. Silver is a strategic metal and it's not it is precious, of course, but, it's more strategic than gold is. But nevertheless, yeah, governments want people to have confidence in their currencies and to accept their currencies for trade. And it's natural for them to, not want people to be invested in the metal sector. And there's lots of documents out there. When Nixon came off the gold standard in the 70s, there was an interesting document that was circulating, and written at the time by the Fed governor at the time, and it said quite clearly in that letter that it's in the best interest of the government to not so much prevent but dissuade people from buying precious metals.
Now, last financial crisis we had back in 2008, we saw gold shoot up to around 1900, and there's a lot of financial pundits out there. One's Steve St. Angelo, who's saying that global gold investment demand will overwhelm supply during the next market crash, because back in 2008, we saw gold bar and coin demand double to 868 metric tons, up from 434 in 2007. Do you think the same thing is going to happen if we approach the next financial crisis, or we're in the next financial crisis?
Well, I think the next crisis is going to be worse than the last one. And I think the bull market, it started off, a little bit slow, and we're in a bit of a correction, within a bull market. But we're definitely started a new bull market in gold and silver. But nevertheless, I think this one that we're seeing or in the midst of, which could go 5 years or 10 years. And I don't have a crystal ball to, say how long the next bull market's going to go. But, the last market, took gold from 250 to 1900. It's about an 8 times move. And silver went from, $5 to $50, a 10 times move. And using those same types of ratios, that would take silver from its lows of, 1350 basically, or 1330, all the way up to $130 silver. And I've said this several times in interviews. It's not the first time I've, thrown numbers out like that. And then, that would put, gold at somewhere around $8,000. So, these moves are what I'm expecting. And, I'm not sure if, I'd be running out to buy gold and silver just based on my belief. But, that's what I'm expecting to see in the next bull market in gold and silver.
Now, very interesting that you say that gold is going to move up, and this is what you think is going to happen, because Ray Dalio, he's on a gold buying spree right now. He added about 575% to his GLD holdings, and he's the 8th largest holder now. Does this tell you something, that something is going on in the economy, in the market?
Well, as I've said in previous interviews, I'd probably recommend he doesn't buy GLD, but I think buying the gold miners would be a much more intelligent move. But because a good gold company or silver company will move a lot more than the metal itself. But I guess an investor like that looks at GLD possibly as a safer investment than a gold miner. But that's the argument that for another day, I guess. But definitely guys like that are sophisticated investors taking a position like that obviously says something about what's happening in the marketplace. And I think he's dead on and is making definitely the right move.
So if he's making this move in GLD Holdings, which is paper holdings, I mean, if we look at the miners, I mean, you're the president and CEO of First Majestic, and you're chairman of the First Mining Finance Company. If you can just give me a little, not me, but everyone, a little background of First Mining, what have you guys been up to? What have you been doing? You're on the front lines here, and what do you see coming?
Yeah, well, look, I'm a bull on gold. I'm a bull on silver. So, I put together First Majestic Silver back in the early 2000s. Because of my view on silver, and I still have that similar view. I think silver is going to do very well over the next few years, and that's why I'm still the CEO of First Majestic Silver, because I think there's a ton of growth left, and I'm very excited about First Majestic. But in the case of First Mining, back in 2015, 2014, 2015, 2016, when I was putting the company together, I hadn't seen valuations like that in the gold space. And, my technical team put together a list of targets, and I was just compelled to go out there and try to buy as many of these targets as possible. And, these trading companies that we bought were trading at, several times the value during the bull market than they were trading when we stepped in and started buying them up. And, it was amazing to me that we actually were as successful as we were, and that we were able to accumulate, 25 projects, of which, 5 are tier 1 projects, all in Eastern Canada, with gold, proven in the ground, or at least resources proven in the ground. And we're going to develop these assets over the next few years, and hopefully even see some of them come into production.
So what has your track record been over the 16 months?
The first acquisition we did was a hostile deal, which was basically within 2 weeks of the company going public. It was pretty amazing. And we actually did win that battle, and we acquired the Hope Brook project. And then we did another acquisition within weeks after that. And, this is a brand new company that just went public, and over a 15-month period, I think we bought 8 companies. And of the 6 of those 8 were our top 10 target list. And, quite frankly, I didn't even think we were going to be that successful. When we came public in 2015, we figured we could do 4 deals in the next 12 months. And that was kind of our goal. We ended up doing 8 deals in 13 months or 15 months, I think it was. So, we outperformed even our own internal expectations. And today, First Mining's got, I think anyways, the best gold development portfolio of any junior mining company.
So we see the Fed out there, and a lot of the Fed houses talking about inflation, and they've been going on and on and on about, trying to hit this 2% inflation. And most of us realize that there's a lot more inflation out there than what the Fed has been telling us. And we're seeing that core inflation has been rising after the 6 years of deleveraging. And we see that, China, we see Russia, they've been purchasing a lot of gold. Do you think they realize that the inflation rate is much higher than what the Fed is reporting? And do you think they're protecting themselves with gold?
I think they're protecting themselves against the revaluation of all fiat currencies, quite frankly. I'm not sure, if they're, bothered by interest rates or anything else. I just think they're I'm a, believer in the Jim Rickards view, whereby, he's saying that the governments of the world need to revalue gold at a certain price in order for them to be liquid, in order for them to, deal with their debts and their deficits. And I think that's where we're going. So, I think virtually all the currencies that we currently use, around the planet will all disappear and will be replaced by, some new financial system. So, it probably won't happen overnight. It'll happen over time. As people get more wind of it and as other governments get on side with that, change in the financial environment, gold prices will start to move and we could see, multi-thousand gold prices, as a result of this new financial change.
Now, the gold and silver ratio, they have been, what are they? It's like 77-1 right now, something like that. I mean, is this normal?
Well, it depends on how far you go back, but, look, silver, if you go back 100 years, the ratio was about, 15 or 20-1. And silver was used in, cutlery and things like that and coinage were really the only two uses. And then, fast forward to, when photography came into being, silver started showing up there. And by the mid 80s, 25% of the world's silver market was consumed by photography, of which, the majority of that was recycled. And silver didn't really find its way into other commercial uses until after that, and now it's used in technology throughout the entire world. And this call right now that we're having simply just couldn't take place without silver. So to go green and do all the different things that we need to do as a human race to improve the way we live requires a ton of silver. And we're mining, even though I'm a huge bull on gold, and as I said already, I think gold's going much, much higher. But silver, I still believe will outperform gold, even though gold will be going higher as well. And I think it's because of what we're mining, and I've said 100 times, and I probably will say it another 100 times, that we're mining 9-1. So for every 1 ounce of gold, we're mining 9 ounces of silver. And you said it yourself, we're trading at 77-1. So if someone could explain to me how a ratio like that can last for, year after year after year, please do, because I'd love to listen to you. I believe that it can't last. And I believe that, one day there's going to be a supply disruption where, Apple or Tesla or Sony or Samsung or you name the company just simply will not be able to buy manufacturers' products any longer because it doesn't have access to silver. And that's a belief I have, and that's why I'm the CEO of First Majestic Silver. Whether it happens or not, time will tell. People criticize me for my predictions, and I get it all the time. But look, I'm a big boy, and I can have my own beliefs, and that's why I'm going to continue to build First Majestic into even a much larger company than it currently is today.
What's very interesting is that the 77-1 ratio, this has happened 7 times since 1988, and every time it did, silver outperformed and mining shares outperformed both metals. I mean, do you think this is what you're saying? Is you think this is going to happen once again?
Yeah, if you go and look at our corporate presentation on our website, you'll see there's a page there that shows, I think, a 25-year chart on the ratio. And you're right, you're dead on. Every time it gets around 80 in that 80 plus or, whatever, it always corrects. The last time it hit, I think, about 85 or something, it dropped all the way to 37. Or maybe it was 33 in April 2011. I forget exactly what the ratio was, but either 33 or 37. But that's an amazing run where silver dramatically outperformed gold. And I think that's exactly the same thing's going to happen again. I think over the next 5 years, again, we're going to see, silver outperform gold. And I'm calling for triple digit silver. And, as ridiculous as it may sound, that's where I think it's going.
And you think the mining shares are going to outperform both metals?
Well, they always do, look at First Majestic in the first 6 months of 2016, for example. The stock was down, I remember, 20% in January of 2016. Silver hit a low of 1330 that month. It was a devastating month. The miners are just being absolutely killed that month. And then all of a sudden, boom, things turned around. And starting in February, silver started to take off. And silver went to just under $21. So it had basically a $7 move from January or February to August. First Majestic shares, were around $4 Canadian, around $3 US approximately, and the stock went to 20 US and then 25 Canadian. So you had a $7 move in silver, and you had a $21 move in Canadian terms in the share price. So you basically had a 3 times move in the stock versus the metal. And that's kind of the beta you get. It's not an exact science, of course, but if you go back 15 years and look at how First Majestic trades, it trades a multiple of the silver price when it moves. But it also, that works against you as well. When silver's going down, the stock dramatically underperforms, but when silver's going up, the stock dramatically overperforms.
In an economic crisis, I mean, a lot of people talk about, owning gold, owning silver, owning mining stocks. Is this still important to have in your portfolio to protect your wealth?
Well, for me, yes. For other people, they may disagree, but, it's really, the tolerance of the individual investor and what the objectives or goals of that individual investor are. And for me, I'm an expert in mining. I'm very comfortable investing in the mining sector. I know it quite well. I know it's risky as well. And I know that, you have to be prepared to be wrong. You buy a stock at, $1, and next thing you know, it's at 50 cents, and it scares people out, and they sell it. And next thing you know, the stocks, moved again higher. And that's an unfortunate thing about the mining sector is it is extremely volatile, and people that are investing in the sector have to be, very aware of their investments, do the proper due diligence, keep their eye on their investments, but be prepared for the volatility. And, often when I go in and buy a new position, in a company that I'm interested in, I may be down 10, 20%, even sometimes 50%, to begin with. But as long as the fundamentals are still there and I still like the company, investors have to ask themselves, three questions when they own a stock, not just a mining stock, but any stock. Would you buy it? Would you sell it? Or would you hold it? And if you can answer that question, or ask that question of yourself every single time you look at your portfolio, you can then really make, I think anyways, proper decisions on what you should be doing to advance your portfolio or to try to squeeze a profit out of your portfolio.
Do you have any new projects or anything that you can tell our listeners of what's coming up or what you're up to right now?
Well, always up to all kinds of interesting things. Being the CEO of, a fairly large mining company, we're always doing some pretty interesting stuff. I think, the things that excite me the most are some of the technologies that we're adopting in our operations in Mexico. And I've said, in my previous interviews, that the mining sector is going through change right now. It was forced upon the mining sector by low prices and low margins and a need to, turn companies or mining companies profitable again. And mining companies led by, companies like Barrick and First Quantum and Teck and Goldcorp and ourselves, of course, we're adopting new technologies and changing the way we do business. And not only will mines become greener, but they're also going to become very much more efficient and lower cost operations. And that's really critical for the future of the mining sector. So those are the things that First Majestic are focused on and the things that, really get me excited. In the case of First Mining Finance, just continually drill and develop these assets. There's not too many companies out there that have a portfolio like First Mining Finance, with 25 projects with, 5 projects with over 12 million ounces of gold defined in them. Springpole project itself has over 5 million ounces of gold, or around 5 million ounces of gold, pardon me. And, it's one of the largest undeveloped gold projects there is in North America. And we feel that will be a mine ultimately. It still has to go through, permitting and feasibility study and all those kinds of things, which is normal. But, that based on the current numbers, that should be a 300,000 ounce producer of gold, which is pretty darn large. And the PEA that just came out values that asset itself around $1 billion, which is, the current market cap of First Mining is $250 million. So you've got one asset that's potentially worth, 4 times the current market cap of the company. So, that's forgetting all the other assets, and you've got Goldland with 2.5 million ounces of gold. You got Hope Brook with 1 million. You've got Pickle Crow with 1 million. You've got Cameron with 1 million. So you've got some pretty good assets there that are just simply not being properly valued in the market.